Hello and welcome. Thank you for joining us here at the Africa Center at the Atlantic Council, live from COP28 in Dubai. I'm Aubrey Ruby. I'm a senior fellow at the Africa Center, and it's my pleasure to welcome you, both those of you in the room and those watching virtually today. We have an exciting program in store. We are convening this important discussion to launch a brand new report from the Africa Center on developing green banking solutions for Africa by one of our own senior fellows, Jean-Paul Mvogo, who is a senior fellow at the Africa Center and a researcher at Sciences Po. So we're going to have an interesting discussion today that's near and dear to our heart at the Africa Center, where we have a working group on inclusive climate finance for Africa, but is also critical to the discussions at COP, in that we know that Africa has contributed the least to global climate change, yet suffers some of the worst consequences. And while it is accounting for 20% of the global population, it attracts only 3%, less than 3% of global investment, particularly into green energy. So we're having a conversation today that will reflect the realities on the ground, but the future as well. And it is in that vein that it's my pleasure to introduce Sei Nafo, who is the CEO of Hydroma USA and the incoming chairman of Hydroma Inc., to talk about the future of green energy in Africa and how we can best finance it. Sei, please join me.
Thank you, Aubrey. I'm looking in the audience, and I see renowned financiers and economists, so I wouldn't dare to tell them how to finance everything I'm going to say. I'll let them do that. But maybe what I wanted to really know in terms of opening this, a few points. The first point, we're losing the battle to climate change. That's a fact. Some of us will wear many hats, and one of the hats I wear is also the spokesperson for the African group at the negotiation for over a decade. And it's clear that we're doing too little and too little, too small, not long enough, not quick enough. So what's the solution? We've heard that we've opened the gates to hell. I didn't say that, but someone said that we opened the gates to hell. So how do we close the gates to hell now and fast? And for us, it's clear. It's through hydrogen. But not the hydrogen that I'm sure most of you know about. The hydrogen that most of you know about at best is the green one, or the electrolyzer-based one. You know, you set up huge plants, renewable energy plants, and then you have huge electrolyzers, and then you power the electrolyzers, and then you break the H2O into H2, and there you have the hydrogen. Extremely costly, takes zillions to do, with product cycle which will take us maybe the next 20 years to do. We can't wait. We need a solution now. Our proposal is natural geologic hydrogen. You drill, and you get H2, as simple as that. In 1987, the first hydrogen well was drilled in Mali by total accident, 1987. Until about 2 years ago, Mr. Diallo, the founder of Hydroma Inc., was considered at best, a fraud. I'm just coming from Australia, a week ago, which is now attending the first natural hydrogen global summit. There are a company in Australia was drilling. There are a few companies, but more importantly, the government of Western Australia has been issuing permits to drill for natural hydrogen. In the US, they're drilling in Nebraska, in Kansas, and other places. In France, in South Korea, in Indonesia, in China, in Oman. A few weeks ago, the US government organized the first bilateral between Oman and the US on natural geologic hydrogen. First time ever. US Geological Survey has been working on it, but we haven't talked about it here. So this was led by an African businessman. It's a Canadian company, and what are we doing now? We're taking it to the US. Mali, of all places, I'm sure, I see bankers here, is not the easiest place to de-risk, especially now. So what we've discovered in Mali, we believe that we can make it happen in the US and in other geographies. So we will be drilling in the US, Q1. I'll be back to tell you how that works in a few weeks. But more importantly, what we are launching is a mission 2030 and a mission 2040. We're launching a mission with a number of institutions I'm not at liberty to disclose today, maybe tomorrow. We're launching a mission which is about everything, everywhere, all at once, natural hydrogen. We will be conducting a global mapping of the potential. We will be working on domestic policy and regulatory programs, having an IRA of hydrogen in the US. Maybe not in time for this administration, but for the next one. And it really doesn't matter whoever wins, because this is a bipartisan issue. Everybody loves drilling. So we're going to be okay with that. And we'll launch an international mission. We believe that by 2030, if we do that, we'll be able to disrupt the G20 energy mix. And by 2040, we'll be pretty much close to, if not get to net zero, get to something very close of net zero. So that's Hydroma. I'm very happy to be here, and I'll be here for the next few days and happy to sort of follow through with that. But there was a question by the COP president seemingly around what's the alternative? What do we do if we phase out of fossil fuel? How do we phase out fossil fuel and not bring about at the same time an economic depression? Well, some of us have been dreaming for a zero carbon fuel. And we have the name, it's hydrogen, but the one now is just not competitive enough. $5, $7, $10 per kilo. The one I'm talking about is less than $1 a kilo. Less than one. So imagine having hydrogen, close your eyes, hydrogen pretty much everywhere, less than $1 a kilo. This is a whole new ballgame. Welcome to that new reality. Thank you.
Thank you, Saini, and thanks for painting a big vision, putting the ambition on the table, and showing where African innovation is leading in the world, even for those who are doubters. So it's my pleasure right now to sit with Jean-Paul, who is the author of the new report about green banking. But really what we're here today to talk about, and we'll have a panel after, is how we can make the climate finance architecture work for Africa. Because the risks are enormous. We know the size of investment needed is over 200 billion in energy alone by 2030 to even make a dent in the 600 million people who lack access to reliable electricity. I mean, we know the needs are great, and the kind of climate justice mandate is enormous and weighty and is being discussed here. But how do we make this architecture work so that we don't have African countries left behind from these new financial flows? So one of the things you've said in this report is you're calling for a resolute and vigorous commitment to a green and inclusive transition. But how do we realize that? So tell us a little bit about making the architecture work and how you see green banking fit in that.
So Thank you very much, Aubrey. It's a pleasure to be here today to discuss such a systemic issue. It's really a systemic issue for the continent because actually Africa is at the crossroad. It's at the crossroad because actually you might say that there are two extreme paths that are in front of the continent. The most extreme one is the one of the statu quo, where Africa would be actually the main victim or one of the main victims of climate change. It's a path under which actually Africa will remain marginalized in world trade with less than 3% of world trade, and where actually we wouldn't be able to achieve the SDGs. This is actually the extreme scenario.
And that 3% seems to be a real limit, less than 3% of global investment. In fact, I wrote a book even 7 years ago that said, what is this 3% limit that seems to be, Africa seems to be stuck in?
And actually, it's been even decreasing. The share of Africa in global trade has been decreasing at roughly 2.5 right now. So we have to break that limit, and there's another path which is possible, a very promising one. A path under which actually Africa could be a champion of the green economy. A path under which Africa could manage to achieve its Paris Agreement commitments. A path under which African countries could be able actually to build green inclusive economies. And a path under which actually it would be possible to move to green industrialization. So this is the path actually we would like to move to. And in order to move to that path, there's something essential. It's financing.
Yes.
You need financing. You need actually a green financial architecture that would be able actually to finance all those needs.
So in the report, you talk about green banking ecosystems. Yes. And, you know, every time anyone talks about an ecosystem that's not like on the forest floor, I think it's hard for people to imagine what that is. So paint us a picture of what is a green banking ecosystem and give us some examples of where they exist today globally and the progress you're seeing in African markets.
So basically, in order to talk about the green financial architecture, we had to face that difficulty, that conceptual difficulty. So this is the reason why we decided to work on something we called actually green financial development. And green financial development actually can be characterized by some dimensions. For example, the depth of the ecosystem, for example, the accessibility of the ecosystem, for example, the diversity of the institutions or products that are there. So using that framework, it was easier for us actually to talk about green financial development in Africa, but also worldwide.
Yeah.
And let's say it's a nascent ecosystem worldwide. It's been, the trends, the levels have been multiplied by 100 after the last decades worldwide. Yeah. In Africa also, it's beginning. But in terms of depth, for example, the continent is suffering. Let's say each year you need actually, it was estimated that you need 300 USD billions in order to finance the needs in terms of green climate for Africa. But the continent is just receiving 1/10 of that. So as far as depth is concerned, it's, we need to do more.
So when we're talking green products, financial products, you're talking about green bonds, you know, debt for climate swaps, banks that are going to assess their financing from a carbon perspective, not just a returns perspective. This is what you're talking about, yes?
Basically, it's a broad array of products. Because actually you need to serve and you need to address the needs of a broad array of people. You need to serve, for example, to provide products, for example, to SMEs. Yeah. You need to provide products also to people, let's say to women or to households. We need, for example, clean cooking solutions. Yeah. You need also actually to provide products and financial services, green financial services to the states. So for all of that, actually, you need that green architecture that is made of a set of institutions that will be able actually to serve and to provide those very diverse products actually, from climate insurance, let's say, to more structured or advanced products.
So can you give us some concrete examples of where that's happening, or at least in the earliest stages?
Yeah. So basically, over the last years, you had some initiatives rising. If we go, for example, to the average person, the average household, you've got what you call pay and go systems, for example, where you would have fintech, Mkopa, for example, in Eastern Africa. They are actually providing, let's say, solar panels to the people, and you can lease the solar panel actually for a small amount each month. So this is actually for households. But then you have also some African banks. For example, you've got net banks in South Africa. You've got also in Burkina Faso, la Banque Agricole et Commerciale du Burkina, which have moved actually to offering green credits for SMEs, for example, to upgrade to actually greener solutions.
Right.
And you also have, let's say, in Southern Africa, for example, the DBSA, the Development Bank of Southern Africa, which is providing very large tickets. For example, when you want to move your infrastructure to cleaner solutions.
So that those transitioning projects.
Exactly.
So, Jean-Paul, we at the Africa Center at the Atlantic Council, we pride ourselves on giving tangible recommendations when we write reports. So, recognizing that green banking is in its infancy in some ways, what are your top 3 recommendations on how to take it forward? Who should do what in order to move the ball?
So basically, I think there's a need for trade finance, a lot of trade finance, because actually you've got those millions of African SMEs, they will need actually to transition to greener practice if they don't want to be excluded on world markets, okay? So you need actually a lot of green finance. We discussed, during the last panel, there was a discussion about carbon markets.
Yeah.
If you want actually the green engineering to work in Africa, you've got to give actually, let's say, good prices to the communities. So you've got actually to address those questions about carbon markets. And
how do you think we can do that? I mean, the discussion around carbon markets is happening, but I don't see a way right now that Gabon is monetizing the Congo Basin, or that big players are actually taking advantage of carbon credits to mobilize billions. How do we get there? What's the first step?
So I think we are here at the COP. There's a summit. Maybe we might need a summit on carbon markets in Africa. To take, let's say, clear and decisive decisions, in order to address those questions and have everybody there. I think there was a discussion in Nairobi about so many head of states said actually that they need to see clear advances and clear progress. So maybe there's a need for such an initiative.
Okay, that's a clear recommendation. Thank you for the future summit on carbon credits. So the fact that we are at COP, what would you like to see come out of this for Africa, for advancing green banking?
So I think that there's a need to work maybe upstream in the intermediation pipeline, in the green intermediation pipeline, to work upstream to deliver more resources for Africa.
So what do you mean upstream? Who sits upstream?
Upstream, let's say, you've got those international green funds.
Okay.
And it's so difficult, actually. We've been discussing when we were doing the report, when we were preparing the report with some African financial stakeholders, and they told us it's so difficult, the procedures are so complex for them actually to tap those funds. Those funds exist, but it's so difficult for them actually.
And there was more pledge this time to the Global Climate Fund, for example.
Exactly. So work a bit on those procedures. Then there's definitely that question about the green fiscal space.
Yeah, we're going to speak to that. We have a panelist who's going to come up.
Exactly, because actually, if you want African countries to create green markets, they should have the resources actually to create those markets, to invest in training, to invest in education. Actually, one of the major issues of green markets in Africa is green literacy, not only among the people, the SMEs, but also among the bankers and the professionals. We need actually a massive training effort in order to have those markets work for Africans and for Africa.
Well, with that, Jean-Paul, thank you for giving us a snapshot of this important report. I encourage all our viewers and those in the room to download it. delivering green banking solutions for Africa. And with that, I will invite my panelists to the stage and we'll continue the conversation. But thank you, Jean-Paul.
Thanks so much, Robert.
Well, I'm so pleased to have this diverse panel up here. I think we have incredibly different experiences up on stage, and I really want to bring those all to bear on this question of how we make a climate finance architecture work for Africa. I'm joined by Heather Hansen, who's the Managing Director for Infrastructure, Environment, and Private Sector at the MCC, the Millennium Challenge Corporation of the US. Dr. Carlos Lopez, who's an esteemed thinker on all things Africa, but a chairman of the board also of the African Climate Foundation. Sarah LeMay, who's the CEO of SLK Capital, been a leader on the African Liquidity and Sustainability Facility. We have Audrey Cynthia, who is head of climate for the African Development Bank, and Chef Pierre Thiam, who is a renowned chef, but also involved with Yolele Foods, and can speak a little bit to the reality of smallholder farmers in very difficult places. So thank you for joining and taking time out of your busy COP schedule. It's a pleasure to have everyone here. For Heather, I want to start with you. When I was thinking, I thought you had an interesting title. They're combining infrastructure, environment, and the private sector. Why do you think all of those are under one hat? Should be on.
It's a really interesting question, and let me say first, Aubrey, thanks for inviting me. I'm really pleased to be here, and it's great to be on a panel as diverse as this one. And I think it's because we just need all ideas to come to the table to face the crisis that's in front of us. It's really interesting. It's a product of MCC restructuring, and in fact, I think it's rather brilliant. What we do is large infrastructure projects in poor but well-governed countries to actually promote economic growth that reduces poverty. And I think in the early days, what we found is, infrastructure investments are really the what of MCC's work. But from the beginning, we've wanted to mobilize private sector investment in and around our projects. And we've also wanted to meet high environmental and social performance standards. We've adopted the IFC performance standards. And so really the best way to make sure your infra folks are working well with your environmental and social folks and your finance, investment, and trade folks is you put them all under the same management chain. Yeah. And that's exactly what MCC did.
No, that's fantastic. It reminds me of things that Elon Musk often says, which, you can't separate design from engineering, because if they don't talk to each other, you'll never get a great product. And the same thing, if you separate finance from the infrastructure team, who knows how it will get done. So MCC's here among a big U.S. delegation. One of the many tools of U.S. policy when it comes to encouraging investment to Africa. What has, we're halfway through COP, what has MCC been proud to announce here as it pertains to making green finance more available in Africa?
One of this is so near and dear to my heart. Here we're announcing the signing of our Mozambique Compact, which MCC signed with the government of Mozambique in September of this year. And it's one of our most exciting programs. It's really the product of MCC's climate strategy and climate commitment that we made in 2021. Our team in Mozambique was already working with the government to address the very real challenges there. And as you all know, it's one of the most climate vulnerable places in the world. And so the team has developed a program that not only includes a bridge, which will be one of the largest bridges in Africa and will be built to climate resilient standards, but also a very innovative program that we're calling, I think it's called the Coastal Livelihoods and Climate Resilience Program. And in that program, we're going to be restoring mangroves and doing other activities to actually boost the fishing industry that's been collapsing because of the degradation of mangroves. At the same time, we're working with the government of Mozambique on this so that we're going to be able to mobilize carbon credits around that program. It'll be the first time that MCC's experimented with carbon credits in a program. And we've also already brought private sector partners to the table, bringing in 41 million into the Coastal Climate Resilience Program, and not only investing the money in the program, but also the expertise that they've gained on the ground working with coastal communities over many years. So that's one of our announcements I'm very excited about.
It is very exciting. And speaking of other coastal communities, Dr. Lopez, you're from Guinea-Bissau. It's one of the few countries I haven't visited in Africa, though I hear about your hippos regularly from my good friend Paulo Gomez. So tell us, what is the work of the African Climate Foundation, and how do you make sure that it's actively advancing the attraction of investment into climate resilient sectors in Africa?
Thank you, Audrey. I think we are the first foundation in Africa that is re-granting, which is very strange for an African foundation. So basically we capture contributions that we then re-grant to different African institutions. It has now been growing quite fast. So we are only 3 years old, but we have started operating about 2 years ago. And it has already attained a level of about $20 million of re-granting.
Wow.
And I think our objective is in the next 2 years to attain 100 billion. So it is successful in that sense. We are also very much involved in trying to increase the African voice on climate space. So a lot of our substantive activities are related to that. So we have done pieces on the carbon border adjustment mechanism, on the critical minerals, on green hydrogen, just the energy transition, and international financial architecture. So we try to create the knowledge base that would allow African negotiators to do a better job.
Well, that's you're the right person for that job, because when I look for insights and knowledge base, I often look to your work and the work you've done historically, UNECA, at other platforms. So one of the things that Heather mentioned is about the need for infrastructure and the ability to invest. And I want to bring Sarah into the conversation because, you know, many people focus on Chinese investment and financing in Africa, which has been significant over the past 2 decades. However, the biggest investors in African infrastructure are African governments themselves. And in order for them to be able to do that and invest in adaptation and other things, they need fiscal space. And we started having the fiscal space discussion during COVID. But it continues and it's real. And so Sarah's been, along with Vera Songwe and others, are pioneering a platform that allows that. So Sarah, tell us about this work and how it fits into a green climate finance architecture that works for Africa.
Thank you. I'll start by saying that my background is investment banking and project financing. So I'm very much used to spending 1 or 2 years structuring a project to get the financing before disbursing. When I heard the first time about this idea of the liquidity and the sustainability facility, the minute I got it, that's when I saw the potential of tapping into the capital markets. So let me explain what it does. The Liquidity and Sustainability Facility was designed by the United Nations Economic Commission for Africa in 2016. It's a market mechanism to create repo, to do repo that exists already in Europe, in the US. And basically what it allows is for any institutional investors who have sovereign bonds to use them as a collateral to raise short-term funding. And by doing this mechanism that already exists, it's not a new idea, but it's just like a new vehicle dedicated to Africa, it allows to increase the liquidity of sovereign bonds. And the hope, as the vehicle scales, is that that would decrease the liquidity premium that African states are paying on the sovereign bonds. The quantification of that liquidity premium is work in progress. But let's assume even if it's 0.5% or 1%, or the estimation could be up to 3%, those 3%, instead of being used to pay debts, could be channeled to green infrastructure and green projects across the various sectors in the economy.
Super critical. And tell us, it started in 2016. Where is it today? And I know you had some announcements here as well, but what have you been able to achieve in kind of rallying a lot of financial players around this concept for Africa?
So it's a very lean structure. We have a secretariat. There are 3 individuals, and I'm acting as the chief operating officer. When we started, the first question was where to incorporate the vehicle to serve the African markets. We've done an in-depth analysis, and we've incorporated in Ireland as what it's called a DAC, a designated activity company. Basically what it means, it's just like an SPV that allows it to be an orphan vehicle. There are no shareholders, but also it's a charitable trust. So it's non-profit. Like, the idea is not to making money, but whatever spread is made is really to operationalize the vehicle. Many milestones, but the first one, it was launched at COP27 with the first $100 million transaction with Bank of New York Mellon as the collateral trustee, Afrexim Bank as the funding partner, and Citibank as the collateral provider. So since then, we've been working tirelessly to bring in the ecosystem together. One of the game changer was the support that we've received recently from USAID, who provided a grant, but beyond the grants, it's really the doors that they've opened to us to access and tap into the institutional investors in the US. So the transaction that we announced yesterday is a great milestone for the LSF. It's a $100 million transaction with the Sovereign Wealth Fund, ADIA, Abu Dhabi Investment Authority, and Afrexim Bank. We have now a very solid legal program that's in place. Our legal counsel is White & Case, that's been working with us from the beginning. And just to give you an idea about like the strength of that program, like we've been doing like those test transactions. The first deal, we had 47 lawyers working full-time to finish the program. And then we had to run it through all the legal advisors. Everyone looked at that program, from White & Case to Norton Rose to Red Smith to Simmons & Simmons. So now we are confident to say that it's very solid.
Yeah.
And where we are going from here is to scale that vehicle, because we are not going to make a difference with the 100 million. It needs a minimum, in my opinion, of $5 billion and more, so that we can start seeing those results that we are hoping for.
Amazing. And I've been watching it from the beginning and so excited about that progress that's being made. You mentioned the role of AfriExim in the process. And one of the things I've said is you can't talk about global climate finance architecture and making it green without talking about African DFIs. And we have Audrey Cynthia from the African Development Bank, who can speak a little bit about the role of African Development Bank, but African DFIs in being the intermediates that you need, and how you think about investing in climate resilient infrastructure that's suited to the African needs. We've had lots of conversation here that you cannot build and address the access to power issue without natural gas, for example. And if some of the world is reluctant to finance natural gas, African DFIs are going to have to step in because they understand the realities. So tell us a little bit about African Development Bank at COP and your priorities.
Thank you. Good afternoon. So the African Development Bank, we really sees the lack of climate finance as the biggest impediment for resilient development for our region. Just to put in context, is the level of financing gap is 2.8 trillion by 2030, just to implement 51 countries' national determined contribution. So as you said, there is a huge need, but it's also an investment opportunity. So Africa is the next green investment frontier. And how do we turn this gap into investment opportunity? So we are looking at the African Development Bank into practical solution at a local level. How do we develop bankable pipeline of green projects, because we have projects, but most of the time they need to be better structured, and also we need de-risking instruments such as blended financing vehicle at the local level to make them attractive for the private sector to invest. And to coming back on the infrastructure gap, so the African infrastructure gap is huge. We have quite a lot of investment in renewable energy, but the infrastructure is really something which has been to be tackled, and the level of resources to build the industry and the infrastructure in Africa is huge, and it has to be done in a resilient way and climate-proof. So the African Development Bank, we have signed on Saturday at COP28 the African Global Alliance for Green Africa, for Green Infrastructure, sorry. So it has been pledged already with an initial 175 million, but it's going to be, the first close will be at 500, and is supposed to build 10 billion opportunities for private sector with project development and also blended development capital. So you see that African Development Bank we are really trying to mobilize at scale climate finance for green infrastructure in Africa. So we develop this kind of vehicle or windows, but we also work at a local level to make sure that as a wholesale climate finance provider, we also build a climate finance architecture through green investment vehicle embedded in existing commercial banks, because we don't want to reinvent the wheel. We have already very efficient people who knows their customer, financial investor, commercial banks here, and we need to work with them so they can channel domestic resources, but also to this green agenda, to countries' NDCs and country strategy, and also have the capacity by securitization or green bond issuance, they will use this kind of financial instrument, which does exist, but but use it for the green agenda.
Yeah, so, you know, in saying this, and particularly thinking about you and Sarah's kind of interventions here, it's easy to think about the architecture as being some kind of abstract thing and climate finance being somewhat abstract. But I want to bring in Pierre, because, you know, help us make it real. You work with farmers in the Sahel I don't know if everyone's aware of this super grain and ancient grain fonio, but I know that I can buy it in my Whole Foods thanks to people like Pierre building the bridges. But how are the farmers affected by these issues? And how can you see these market linkages you've helped to build, particularly in the US market, with African small providers? How can it make them more resilient?
Oh, in so many ways. I mean, it's really, to me, I saw the opportunity as, it just came to me really as I was realizing that the market didn't have a link with fonio. I grew up in Dakar, and I never had fonio growing up in Dakar. It's only when I was writing my cookbooks and traveling in the regions, in most remote part of Senegal, that I stumbled into the grain, and this is an amazing grain, and doing more research on the grain, it turns out it's like this drought-resistant grain. It's a super grain. It cooks in 5 minutes. It's gluten-free. He was checking all the boxes, and why is this grain not a world-class crop? That was the question, and this naive question led me into this journey into figuring out how to open markets for it. And that started like this, and bringing that grain into the U.S. Whole Foods was the first partner, and today we are distributed across the U.S. in all the Whole Foods, in Target, and many supermarkets, Mayo, Sprouts, with different products connected to Fonio snacks, Fonio chips, even Fonio beer now, with collaborations with brewery. And the impact is amazing, and it can be even much, much bigger. You know, when you realize that we created a market for this grain in 5 years, there was no knowledge of Fonio in the US market, except the African communities, I mean, the ones that had access to it. And we branded it. It was all in the branding. And once you brand it and you tell the story, the consumers are here. The consumers, the Africans who know it, but mostly the Gen Zs and the millennials who are conscious consumers who are looking for new flavors. Sorry, go ahead.
And this way that Fonio's grown, I mean, if desertification gets worse and lack of water, I mean, what happens to the Fonio growers, and how is this new business making them more resilient?
Well, they didn't have access to market before, and now they have this opportunity that comes to them. So it may sound easier, but there's more to it. You have to organize them at the supply side, because now that the demand is here, you have to make sure the supply can support that demand, right? And that's where we need financing. That's when we need support. But the communities are definitely benefiting from it. The communities now are becoming exporters. They had this grain that they was only using as a subsistence, and now they have access to a market which they didn't have before. The difference, though, that needs to happen is in the processing. The community is dealing with a grain that has close to 50% of post-harvest waste.
Wow.
Which is huge. In addition to, there's still some manual in the processing. So what we figured out that for us to really turn it into world-class crop, we had to innovate. And that's when we went to commission a mill that will remove the post-harvest waste to like single digits from 50%, and turn it from 1 ton per day in processing to 2 tons per hour. And that's when you change everything now. And you turn these farmers who have the land. Fonio is easy to grow. They call it the lazy farmer's crop. It's really like you throw the seeds and you wait for the harvest. And it can grow within 2 months. It's really a fast harvesting crop. So now if you figure out the way to turn the processing into something that has the standards of the demand, the international demand, you have a game changer here. And that's Fonio is just one example. There are so many other crops that are grown in Africa that have been ignored by the food system. And what we did with Yolele, with Fonio, should be a path of development that could be modeled by other crops as well.
So, I mean, you're speaking to this question of how Africa not only feeds itself, but the world, right? And this food security issue has become even more real in the face of the Ukrainian war and food inflation, etc. And how do we build, Carlos, I want to come to you in part. I know you've thought about agricultural development in the past. How do we build meaningful commercial agriculture across Africa that can address food security while being greener?
Well, latecomers have a lot of disadvantages, but they have some advantages. They can benefit from technological developments that make some solutions lower cost than going all the way. And what we know for sure from a policy perspective is that you need actually to have industrialization as a pull factor to increase agricultural productivity. Unless you have that pull factor, it's very difficult to build a value chain. Or if you build one, you are going to face all the difficulties of an ecosystem that is not prepared to take advantage of gains in productivity. So what is being described with Fonio is a very good example of how you can tap into an opportunity, but you do need to actually go all the way to the final consumer. And that means...
And the grower.
Yes, and you have a certain degree of processing, because processing food can be just packaging, can be just making sure that you have the right certifications, phytosanitary conditions. So all of that is part of the value chain.
Yeah.
And Africa has immense opportunities in this field because if we just look into our internal market, it's going to grow because of demographics. And it's probably the area where the intensity of intellectual property is the lowest.
Yeah.
So you have entering some value chain is very costly because of the intellectual property dimensions, not to mention automation, robotization in some of them. But agro-processing is within reach.
Yeah.
And it's one that has a market within Africa already.
Already the
And
cities, 50% of Africans living in
exactly.
cities.
And as also this additional opportunity of tapping into different types of crops that are not known abroad, that have, superfood sort of status that we are not properly using.
But the connected the dots, I mean, it seems a little bit far-fetched, but what it takes is intermediation. And we're talking about intermediation of capital, but it also takes intermediation in trade, is what Pierre's doing. Because, I sit in Washington, I've, worked across Africa for 20 years. People are always like, oh no, I have this great product, it's gonna sell in the US. But when you look at the packaging, and you know what it takes to get on the shelves of Whole Foods, like you look, it's not, there's a gap there. It won't work unless there's someone like Pierre who can bridge the gap, who can intermediate. The same way that the African Development Bank, it takes capital from global markets, it takes capital from sovereigns, and it uses its AAA rating or AA rating to bridge the rating gaps in a way. And that the vehicle that Sarah created, in part in Ireland, is intermediating, right? And that's really critical, I think. So sometimes we have too many intermediation, too many middlemen, and in some sectors, but not enough in others. So I'd like to speak a little bit, Audrey, I'd like to come back to you to talk about that kind of gap in intermediation and where that comes into play, particularly around the discussion, there's not enough bankable projects. We've all heard that, not enough bankable projects. Where do we need those intermediates to act?
Thank you. Just to also come back about the food security. So Africa has 65% of land which are uncultivated. So Africa can feed the world. And also in terms of productivity, most of the productions come from some small farmers. So imagine we can enhance in a huge way the level of production, and we have so many good products which are unknown and easy to grow and who have all the benefits. So I'm really, those opportunities are very fantastic, and this is what we do by try to provide and bring the climate finance at a local level for local farmers to benefit, and by bringing the financing we also train the financial intermediaries, let's say the microfinance institution, who are the one who can talk to the local farmers, and they can also help them to better structure their projects, and also make them understand that there is actually fundings available for them to strengthen their project and make, for example, their agriculture project smart. Bring irrigation, for example, irrigation system, how to increase the productivity but in a resilient way. So we work with this, especially for the financial architecture in Africa. It's clear that we need this kind of intermediate because there are none. And the current, the financial institution there, they see green investment as risky. Yeah. So that's why we need to shift their paradigm and through capacity building, explain that actually there is a way to make those projects bankable for them, and this is through blended finance. So it's using a small portion of public resources to de-risk those transactions and to increase so the appetite for private capital, private investor. So there is tool, and that's why through the African Green Bank initiatives, which has been launched last COP, we are supporting countries, but also national, local financial institutions to create their green investment vehicle, which is blended financing vehicle, so they will be able to respond to the demand, because there is a huge demand. We have a lot of projects who are waiting, green projects who are waiting to be funded. So here you see there is a lot of capital available because investors are looking for opportunity, green opportunity. And there is project developers who are looking for those fundings.
Yeah.
So so we are just creating through these initiatives the platform to meet those demand and this offer.
And Heather, I want to bring you in because MCC's had an interesting, the model at the heart is trying to address this issue about having projects, right? You can't get a compact unless you have the projects. So maybe you can speak a little bit about that process that happens before compacts are awarded.
Sure. This week we've heard so much about the lack of bankable projects. At MCC, though, we also hear about the fact that there's a lot of private capital that doesn't have anywhere to go. And so you end up asking yourself, like, what's going on there that the two things don't meet? The way MCC does it is unusual because when we make an investment in a country, we make large 5-year infrastructure investments in a country. So we may be putting in $350 million to $650 million for a 5-year project. And we do look for local intermediaries. We do set up green facilities in some of our country programs. Because the architecture doesn't exist, because the ecosystem is emerging, we actually create some of these things through our blended finance components of our programs. And so it is exciting for us, but I do want to note something that we haven't talked about on the panel yet, which is so important to the MCC model, and which people actually have come up and told me here in terms of, hey, thanks, this is something MCC did for us and we really, really value it. And that is using that project finance or those opportunities, those investments, to really promote the right kind of policy and institutional reforms so that sectors become more sustainable.
Over time, yeah.
All projects in that sector become more bankable, and that we're lowering the risk. Because I think risk is really key here. Africa's always been seen as a really risky environment, and then we add all the climate risks on top of it, which are actually very difficult risks to measure. MCC's been working on how we measure this because we have a lot of economists who are really into measurement, and so we've spent years really trying to improve the ways that we do this. But I can tell you there's still a long ways to go before we have the research and the data to really be able to quantify some of these risks, and we're not going to have time. So in the meantime, we'll have to keep looking for those innovative methods to de-risk projects because the risk will still be there.
And I deeply appreciate that because, I was on a panel earlier today and one of the speakers was saying, we were talking about this bankable project thing, and they're saying, oh, well, the problem is that regulatory environments aren't good enough yet and you need this kind of regulation and that kind of regulation. But I was saying if we looked at the, American economic history, if people had waited for our regulations to be right before investing, the entire American West would have never been invested in. So, it's that process of doing the investment and being in there and being in the arena and kind of having that friction that produces good policy in the end. And it's not something that, developed countries have mastered. They're constantly messing around at the margins of where good policy is made.
And it can't be an academic exercise, right?
No, it's a doer.
It has to be when you're doing and when you're trying to figure out what makes an investment sustainable.
But I do want to come back to this question of risk. And Sarah, I want to, your investment banking hat and thinking about the risk perception of African markets and how we address that to make global investors more comfortable. I mean, many of us in this panel have spent time trying to convince people of the opportunity we feel and we see, and the demographics as Destiny's story and all those stories. But industrialization, Africa is less industrial today than in 1980. The agriculture piece, 50 years ago, McNamara, when he was head of the World Bank, talked about African agricultural productivity in Nairobi 50 years ago. And we're actually at productivity levels that haven't improved dramatically. So in many ways, it's part of the challenge is convincing the outside to see what we see and to address that risk view so that capital can move. So thoughts on that, Sarah, and how to de-risk?
I will divide the answer in two segments because there is a huge difference when we talk about $200 million plus projects, 1 billion, 2 billion projects, and when we talk to invest small entrepreneurs. And I do spend a lot of time working also with within the climate accelerator space, talking to entrepreneurs on a daily basis. So the first part, it's easier to raise large funds. And when we talk about de-risking large projects, whether it's infrastructure, solar, wind, green hydrogen, etc., we are talking about credit risk, political risk. There are
Currency risk.
political, credit, currency, there are a lot of them, but like the big ones when it comes to Africa in the mind of the investors, it's the credits and the political risks. There are instruments out there in the markets to mitigate those ones. Talking about like political risk, it could be a political wrap. We've worked extensively in the past with the likes of MIGA or the Lloyd's markets to cover the key risks there. On the credit risk, that's what Aubrey mentioned. There are different instruments with first loss, etc. But that's very abstract. Let me tell you, when I talk to entrepreneurs, what it means to the risk. We work with entrepreneurs across various sectors, whether it's energy, whether it's agri-tech, precision farming, vertical farming. It could be like some less known sectors, black soldier flies producing animal feeds, protein. They have the technology, they have the idea, and the best way to de-risk it, one, is to strengthen the technology and to test it. Because without the technology, there is nothing that can be done. The second thing to do to de-risk it is to build some sort of accounts. You cannot have idea, go talk to investors without a minimum of financial literacy. And that's where capacity building comes in. And the third way to de-risk is to open up market access and off-takers. And I was listening 2 days ago about this first mover coalition with those pledges to send that demand signal to the market for the innovators who are coming with products yet at a premium, but to encourage them so that they can reinvest in the technology to make it affordable in the near future.
Yeah. Fantastic. That's a very optimistic thing. I know we're running out of time, but what I want to do is go down the line and to say, you know, we're all aware of the hugeness of the challenges, of the warming planet, the hottest November on record of history, you know, these kind of challenges. But let us talk a little bit about what is at least making us optimistic and motivating us in the near term. Maybe Pierre, we start with you and we'll come all the way down to Heather.
So repeat the question, sorry.
Just what's making you optimistic right now? I mean, you came to COP in the face of all this climate challenge conversation. We have Ukraine war, we have a challenge in the Middle East. Like, how do you know, what's really making you optimistic right now?
Well, it's tough to be optimistic these days, definitely with the world is just a mess. But this conference is I mean, looking at the pledges that are being taken, hearing I mean, just what Audrey just said, right? How we can now think about accessing us African investors, entrepreneurs, accessing to these pledges, these monies. I mean, making it more accessible. It's hopeful. I mean, we just you know, we wait and see. I mean, we've been there before. I may sound skeptical, but this is the way I'm now being trained to become. Really, I have to see what comes out of it, because we have de-risked things. We have shown a proof of concept. We have shown that there is a demand for these crops, even in a market that didn't know the crop, let alone in Africa, that culturally they know what the crop is. So if we can, and we brought the innovation. I mean, what did I forget? The MIGA, we had brought the MIGA. They talked to us about political risk. We brought that. Mali, where we were going to put our infrastructure, was scary. We moved it to Senegal. So there's all these things that African entrepreneurs have to face, but we are coming with solutions, with answers, and we need to see the money now. Where's the money?
And then
markets
you need,
here.
well, you can keep it passing, and I think we'll see some of that. But to make the pledges reality, we need intermediation. We need African DFIs. So happy to have Audrey here sharing her perspective.
Yes, I think there is very good perspective, because I will say, as you say before, we were talking about productivity a long time ago, but still it hasn't raised so much. But today is different, because we really see that African countries, African project developer, farmers, they are now taking to the hand their future. And we shouldn't wait for outside to come with the solution, because we have the solution already. And through your initiative, you see that actually we have the resources. Actually, we have even better solution even for the world, not only for ourselves, for our African region. And you can really see with the African Green Bank initiatives how countries now come and say, oh, we need this kind of vehicle. How financial institutions say, oh, this is a green opportunity. I want to seize it. I want to understand how I can use it, how I can make it profitable for my customers and also for my stakeholder. Thank you.
Sarah.
For me, what brings me hope is the combinations of three ingredients. One, the financing, the funding. Two, the knowledge and the science. And three, the heart, with meeting people willing to do good. And when you have these three ingredients, it gives us a lot of hope.
Well, I wanted to say something about risk. That's why I was asking
please.
for the floor. You know, there are two ways of actually having savings, right? You have savings by accumulating, so your stock, it can be layers of history that can explain different forms of accumulation, and then growth and productivity.
Yep.
Well, what do you expect if your average population is 19? Do you expect them to have savings?
No, most people are poor when they're 19.
When 19, you don't have savings, right? So what we have in the world right now is an aging population that is very rich and is getting older. And you have in Africa a very young population that doesn't have savings.
Right.
Not enough, because they are 19.
But then you have a concentration of capital in developed
but
markets.
the returns,
concentration of opportunity in African
but the
markets.
returns for the older population are going to diminish
Eventually.
significantly, and that is going to change risk.
And that's the optimistic opportunity looking at it. So, Heather.
Well, I would say what gives me most hope is the fact that because I think people realize the urgency of the crisis, there's a lot more opportunity for collaboration.
Yeah,
I think we find that our country partners, not just in Africa, but all over the world, are looking actively for climate solutions. They're looking for new ways to do that. And even within the US government, where it can be very difficult for different agencies to collaborate with one another because we have such different mandates and timelines and rules, right? Financial institutions have the same thing, right? And so the structures that we're within sometimes make it very difficult to collaborate. And yet I see that there are many, many examples where we're more and more able to do this, especially in blended finance, because people are coming together and really looking for those solutions. So it's not always easy. It's very challenging, but we like to say challenge is our middle name at Millennium Challenge Corporation.
It's true.
And we've been really, really pleased to work with so many great partners, both in the US government and also with different financial institutions on these programs.
No, it's that diversity of partners and voices that we really applaud and try to build at the Africa Center at the Atlantic Council. And, so excited to have you guys here today and grateful for making time. So thank you. We're out of time, but thank you for joining, and we look forward to future events.